Hello everyone and welcome to Ticket Markets. Today we have Mr. Dorab Mistry with us and we're going to talk about the oil production, the markets in India and as well as the global markets. Welcome to Ticket Markets, sir. Sir, the first thing I wanted to ask is, what is the global soybean price outlook for you? Like what it's going to be and how it's going to trade, sir?
The global market for soybeans is divided into the market for U.S. soybeans and non-U.S. soybeans. So non-U.S. soybeans are more valuable and more expensive because China is buying non-U.S. soybeans. That means soybeans from Brazil, Argentina, Canada. And US soybeans are trading like the Chicago futures because there is no buyer for those soybeans, or you can say that the buyers are other than China, and China is the world's biggest importer. So the outlook for non-US soybeans is bullish and bright. And I think we will see huge increase in plantings in South America, in Canada, in parts of Ukraine, even in India. But the outlook for US soybeans is not good. But it could all change if President Trump makes a deal with China. You see, this is all influenced by the trade dispute between United States and its trading partners, including China, Canada, all these countries. So, unfortunately, because of the trade dispute, the outlook for commodities is not bright. And of course, we have also had very good weather, and so production is also fantastic. But it could change in the next 1 year. But if you're asking me what is the outlook today, the outlook is relatively good for non-US soybeans, but bearish for US soybeans.
So as you spoke about the trade war which is going on between US and China, can you explain it in a length, like how it's going to affect the commodities and how it's going to affect the equity market and other things between in a global manner, sir?
Well, in a global manner, the first thing is that all trade disputes are bad for the global economy. And so in terms of equities, commodities, they are not good. They are also not good for growth. The United States has had a fantastic run of good economic growth and fantastic equity markets because of the tax cut and because of the deregulation that President Trump has introduced. But at the same time, now we are paying the price for that because of the disruption caused by the trade policy. And that trade policy will affect every country, including India. Today, why are oil prices moving up? Because President Trump has imposed sanctions on Iran. So Iranian oil exports are going to be curtailed. That is why oil prices are rising, and that has a direct effect on the Indian economy. So similarly, trade disputes are bad per se, and that is why I would say that I am not bullish on most products as of today. Now if tomorrow these trade disputes disappear, then yes, things would be different.
Sir, how is going to be like for global palm oil? How is the demand and supply going to be in future?
Sure. Global palm oil supply is excellent. There is almost, you could say, overproduction. The Indonesians have found a solution to this because they are encouraging the use of biodiesel. Biodiesel made from palm, and they are mixing up to 20% biodiesel in their fossil diesel for cars, trucks, railways, everything. Now, this is a good method to take away surplus and create a tight market. However, the production is so good that for the next 6 months, palm oil prices will remain where they are, fairly reasonable, fairly affordable, and for India, as an importing country, that is good news.
Sir, how is the rising crude oil prices going to impact palm oil prices, sir?
The rising crude oil price has put a floor underneath the price of palm oil. So I don't expect palm oil prices to drop further from here, because now it is so attractive to convert palm oil into biodiesel, and then that creates additional demand. Because remember, the demand for crude oil, fossil demand, is about 50 times larger than the production of vegetable oils. Vegetable oils are very tiny compared to the world universe of crude oil. So when crude oil prices go up, it has a beneficial effect on palm oil.
Sir, we have seen recently that Indian rupee is getting weaker, and can you just tell me how it will impact the imports and exports both?
Well, it will obviously encourage exports and discourage imports, and we are already seeing that imported palm oil, imported soybean oil have become much more expensive because of the weaker rupee. Now, why is the rupee weak? The rupee is weak because our balance of trade, our balance of payments is out of line. Our current account deficit is too large. And secondly, I think we are going to face elections next year. And always in the run up to an election, there is uncertainty. Who is going to win the election? Will the present government be re-elected? Will policies change? Will policies improve? These are all questions in the minds of the market participants. So that is why the rupee is weak. But let me tell you, the rupee is not as weak as, say, the currencies of Brazil or Argentina or some of the other countries. So in a way, India has done quite well given the headwinds that there are in the world market today.
Sir, coming to the equity markets, we have recently seen the NBFCs has gone down, and specifically DHFL has share prices reduced till 55%. So, what do you think about that? Like, how it's going to affect now equity
I can't
market?
tell you about specific scripts, but clearly in the first of all, these shares had gone up too much. The whole Indian market had benefited with the very favorable policies that were in the local scenario. Having gone up so much, there is now some doubt in people's minds whether these policies will be continued, how well the economy will do. As you rightly said, the rupee has weakened. So there is an expectation that interest rates may have to rise. And if interest rates rise, then the non-banking financial companies will face trouble or they will face headwinds. So from that point of view, it is entirely understandable that there has been a correction in the Indian market. I would say that the correction is a good thing because the market was becoming extremely overvalued. So from that point of view, it's a good thing. And finally, you must always remember that when a share price drops dramatically, there must be some news that people who are in the market know, which the public do not know. Unfortunately, that is a reality. So individual scripts may be because of certain reasons that we don't know. But in general, I would say that this is a correction which was expected. It had to happen. It's just unfortunate that it has all happened at the same time.
So, sir, do you think there was some hidden agenda or some hidden thing which internal people knew in NBFC sector and other people in the market didn't knew?
No, I don't think there was any hidden agenda. But for a specific company, there could be something going on which the market does not know. But as an industry itself, no, it is not possible for there to be any hidden agenda. No. But these things happen. When a market goes up too much, we have seen that in commodities in particular, that if commodities rise by 20, 30, 40%, then invariably that releases supply, that releases, the buyers suffer from what is called buying fatigue, and then they tend to take profit. Simple.
So, sir, with the rise in crude oil prices right now, it has crossed $81, and there was a report from JP Morgan that it can go till 90 USD also. So, what do you think? How it's going to end, and what is the way out from this? How gonna Indian people or the world market going to get a cheaper price at the petrol pump?
No, I don't think Indian people can expect cheaper prices at the petrol pump. No, not for that. But they may be able to avoid further higher prices because I think that this crude oil price has been hyped up by the producers like Saudi Arabia, Russia. All these people benefit if the price goes up, and they've hyped it up. And of course, President Trump, by putting sanctions on Iran, has shut out Iranian crude. So that is why, in my humble opinion, India must keep buying Iranian oil. And a very good move made by the government is to execute this rupee payment agreement with Iran. Now that we have a rupee payment agreement with Iran, we must keep buying Iranian oil, which is cheaper in the world, which comes on credit, and it means that that much oil, extra oil, comes into the world market. China, like India, is going to continue to import Iranian oil. If we manage to ensure that Iranian exports continue, there is no reason for the fossil fuel market to go up. This market has been hyped up because of the Iranian sanctions and because of the collective actions of the producers like OPEC. And we as consumers suffer from that, and it is important for us that we keep all channels open. We must allow supply to go, and that is why we must keep buying oil from Iran. We must not bend down to what the Americans say, that you must boycott Iran or you must not trade with Iran. No, Iran is our friend. Iran is a good market for Indian goods, and Iran is a very valuable and reliable supplier of oil. If we do that, we can avoid these big increases in oil prices.
Thank you very much, sir. Thank you for talking to Ticker TV, sir.